Hi, this is Indranil and you are watching Business Bites in our channel The Spotlight, India's first online business news channel. In today's Business Bites, first news we have grocery supermarket chain More Retail is planning for 2000 crore IPO in next 12 to 18 months. Second news we have Flipkart to limit their quick commerce Flipkart Minute expansion only to top cities in India. Third news we have AI-enabled smartphones by smaller brands will be the new choices for the youngsters. Fourth news we have Himadri Specialty Chemicals to acquire US-based lithium-ion battery cell technology firm International Battery Company. And fifth news we have French food company Danone is looking to have 60% stake in India's Greek yogurt maker Epigamia. In first news, grocery supermarket chain More Retail is planning for 2000 crore IPO in next 12 to 18 months. More Retail, which is presently owned by Amazon and Samara Capital, is planning to launch their initial public offering in next 12 to 18 months to raise 2000 crore, which will be mostly through fresh capital raising. In More Retail, presently Samara Capital holds 51% stake, while Amazon is holding 48% stake are unlikely to offload their holdings, where remaining 1% stake is with the high net worth individuals and family offices through holding company More Consumer Brands. More Retail is having their plan to expand their 775 stores network to 3000 stores by 2030 and also to reduce half of their debts, which is currently 500 crore, where Amazon and Samara Capital have together infused 900 crore in the company in last 5 years, which was used mostly to reduce their losses. More Retail has rationalized their store network by closing their unprofitable stores and exited from markets like Maharashtra, which include Mumbai, New Delhi and Indore, when they also exited from lifestyle categories to focus only on food and grocery. Presently, the company is having their presence in South India, Punjab, Haryana, Gurugram and Noida, West Bengal and Uttar Pradesh, when they have a plan to enter Jharkhand and Odisha this year. More Retail has recorded sales of 4,985 crore for the financial year 24-25, which has grown by 14% from last year, and their EBITDA loss was reported as 65 crore in financial year 24-25, which was 260 crore in the last year same period, where about 25% of their sales come from online segment, since the company is the preferred seller for Amazon's grocery retail venture in India, that is Amazon Fresh. In second news, Flipkart to limit their quick commerce Flipkart Minutes expansion only to top cities in India. Walmart-owned e-commerce giant Flipkart and their quick commerce vertical Flipkart Minutes competing with Eternal-owned Blinkit, Swiggy Instamart, Zepto, Big Basket's BB Now and Amazon Now is planning to limit their expansion plan to the top 6 to 8 cities when they are currently present in 14 cities and runs a network of more than 300 dark stores, and they have intent to scale up their dark stores number to 500 to 550 by October and a total 800 dark stores by the end of this year. In March this year, a joint report was published by Bain & Company and Flipkart, which pointed out that India's retail gross merchandise value growth slowed down to 10 to 12% in 2024, which was 20% in the previous year on account of macroeconomic consumption stress, where in the same period, quarterly gross order value for quick commerce players more than doubled, though the base is very small. And even Flipkart, who are working on to shorten their delivery timelines across their broader economic network, where a wider expansion of Flipkart Minutes could result in increased losses. As per data, more than 90% of the quick commerce volumes are generated from the top 8 cities in India, and a major portion is coming from Delhi NCR, Mumbai and Bengaluru, where Flipkart is planning to go deeper. With this revised action plan, now Flipkart and Swiggy Instamart is taking relatively cautious approach for their expansion, while Blinkit aggressively chasing market share even at the cost of short-term profitability. And last month, Flipkart's board has approved their proposal to shift their domicile from Singapore to India ahead of a planned IPO in 2026, when the process was initiated almost a year ago after Flipkart raised $350 million from Google as part of a $1 billion fundraising round led by Walmart. In third news, AI-enabled smartphones by smaller brands will be the new choices for the youngsters. AI-enabled smartphones are becoming more affordable as a major price drop is expecting in the second half of this year, which will be driven by smaller brands switching to new generation mid-tier chipsets which are capable of running on device AI workloads. As per research data, the average selling price of AI smartphones has fallen by 39%, and the sharp fall has triggered by higher sales of iPhone 16 series base model this year, which are considered AI-enabled smartphones along with the introduction of AI features in the mid-tier Android phones too. In recent time, the AI smartphone surge is driven by Apple, Samsung and Google on the premium end, when smaller brands are operating in the mid-tier price segments which are fast catching up. When London-based brand Nothing recently announced a new smartphone which is priced below 50,000 but capable of running generative AI tasks on device, while Motorola, Vivo and Oppo have also launched smartphones with limited AI capabilities in the lower price range. In this space, the brands are also banking on chip makers like Qualcomm and MediaTek, which has diffused Gen AI hardware to lower-end chipsets and opening up the lower price segments for disruption. However, a major deterrent for smartphone brands to diffuse these AI features to lower price tier is the steep cost of providing these features. In fourth news, Himadri Specialty Chemical to acquire US-based lithium-ion battery cell technology firm International Battery Company. Kolkata headquartered Himadri Specialty Chemical is in advanced talk to acquire a 10 to 12% stake in International Battery Company, which is a US-based lithium-ion battery cell technology firm, when the deal is estimated to be at 10 to 12 million US. With this strategic investment, Himadri Chemical will be entering into the high-value battery cell manufacturing space and will also expand their role from a specialty materials provider to an integrated player in the new energy ecosystem. On the other side, International Battery Company is currently valued at around 100 million and having their operations in the United States and South Korea with a 35,000 square feet facility where they produce lithium-ion cells, and these cells then shipped to India for final assembly. However, earlier this year, Mahanagar Gas Limited acquired a 44% stake in International Battery Company by investing 385 crore and formed a joint venture to manufacture and distribute lithium-ion cells in India, when International Battery Company along with Mahanagar Gas Limited is in the process of setting up a 500 megawatt per hour gigafactory near Bangalore, which will localize production, lower cost and cater to India's rapidly expanding mobility and energy storage markets, which will be operational by December this year, where Himadri Specialty Chemicals entry could complement this arrangement by creating a robust India-centric battery ecosystem. And in fifth news, French food company Danone is looking to have 60% stake in India's Greek yogurt maker Epigamia. French food group Danone is looking to double their stake in homegrown Greek yogurt and fruit dessert maker Epigamia to 60% by buying out Belgian private equity firm Verlinvest Holding, where both Verlinvest, the investment vehicle of the Belgian family behind the world's largest brewer Evi InBev, and Danone Manifesto Ventures, the venture capital arm of Danone, currently hold about 30% each in Epigamia. Epigamia is a maker of yogurt, smoothies, desserts and shakes, where they compete with Nestle, Mother Dairy and Amul, in addition to half a dozen direct-to-consumer brands. When in an unfortunate event, the brand's founder Rohan Mirchandani passed away last December at the age of just 42, when he had co-founded Drums Food International, which owns the brand, in 2013. Epigamia sells 24 varieties of products across general trade, e-commerce and quick commerce platform, including their own online store, when recently they entered into the zero sugar protein shake category. The company was initially backed by DSG Consumer Partners and World Invest, and they got 182 crore investment from Danone Manifesto Ventures in 2019, when high net worth individuals such as Sipla founding family Samina Wazirali co-invested in the company, and Bollywood actress Deepika Padukone backed investment firm Ka Enterprises too invested in Epigamia in 2019. So these were the top 5 business newses from Business Bytes in our channel, The Spotlight. I would like to request you to please subscribe this channel so that you can have all the updates from our end. Thank you very much for watching Business Bytes and signing it off.